Countries around the world are trying to figure out how to ditch the US dollar, and some increasingly are succeeding. I believe in a world of slow de-dollarization, you want to have options all around the world so that you can pivot. Today, I'm going to tell you why that matters and why having no alternative won't save you.
We are the reserve currency, and I see no option for any other currency to be the reserve currency.
You have countries like Russia and China which have declared the necessity for a multipolar currency environment, but it goes far beyond those two. And so the point that Warren Buffett makes, and many other people make, which causes me to say, what if there's no alternative, is that we are in a multipolar world. I've been talking about that with you for some time now, about the fact that there's not one thing that's going to replace the US dollar's significance. People say, oh, well, the euro, that's even worse. And sure, back when Gisele Bündchen around 2010 was saying, only pay me in euros, the euro in terms of reserves did spike. Now it's back about where it was at the turn of the century. So the euro is not the answer. The pound obviously once had far more significance. I'll come back to that in a minute. There's actually a little bit of movement in the pound. But you say, okay, what's the other currency? Is the renminbi going to be it? And so what we'll hear from people sometimes is, oh, what's the next Singapore? Because maybe I missed the boat on moving there. It's too expensive. I can't really get in there. I can't get citizenship there anymore. You know, what's the next Singapore? And people don't understand. I mean, to find the next Singapore, you have to find a place that's kind of up and coming. And that takes a little bit of guts to go with a place that's not the number one undisputed leader. Singapore, a couple decades ago, wasn't a place many people wanted to go. But if you were paying attention, you would have realized they were building something great. They were moving in the right direction. They had positive momentum. De-dollarization is an issue because the U.S. government, the U.S. economy, I'm not saying right now, I'm not saying job growth this month or quarter, but I'm saying the economy, economic freedom, the U.S. dollar status as the world reserve currency is heading in the wrong direction. Now, this is not some doom and gloom where we're talking about, today it's 50% and tomorrow it's 10%. It's very, very marginal. And so someone says, where's the next Singapore? Understand, besides the fact that you have to have the guts to go to the next Singapore before everyone else says that's the place to go, you also have to understand there's not going to be just one new Singapore. Number one, there's so many places competing to be the Singapore of this, the Singapore of that, the South Korea of this. Lots of countries are in the game now. Now, I'm not saying most of those countries' currencies are a contender for the world reserve currency. I hold a very small amount of my net worth in Georgian lari. It's done very well. It's appreciated over the years. I get a lot of interest. I don't think the Georgian lari is taking over as the world reserve currency or even making anything of a dent. And by the way, I think in some regards, you want to live in a small country, you want to have a small country's passport, you want to have a lot of small country stuff in your life because those small countries don't use their passport, their banks, their currency as a weapon in ways that could ricochet back on you. Being involved with stuff in the U.S., if you're a U.S. business and they ban TikTok, hey, what if you do business in Asia? Might not just be China who doesn't want to do business with you anymore. You might lose some opportunities. But understand that not only does this change happen at the margins, but you're going to have lots of different places competing. So everyone says, oh, it's going to be China, it's going to be this, it's going to be that. It's going to be a lot of places. And so I'm going to come to those numbers in a minute. But first, let me share this with you. Countries like Brazil, Russia, India, China, South Africa, the BRICS, some of the ASEAN countries, which is 10 countries in Southeast Asia. I happen to live part-time in Malaysia, where we host our annual event, Nomad Capitalist Live. Some of those ASEAN nations, Kenya, Saudi Arabia, and the UAE are now pitching to use their local currencies in trade. They're saying, wait a second, we've got a system that, much like all the branding of a country like the U.S., it's just that it's branding. It worked after World War II. Okay, you're the winners. Okay, you take control. That's not the world anymore. President of Brazil, Lula, he says, quote, every night I ask myself why all countries have to base their trade in the dollar. Why can't we do it based on our own currencies? Who was it that decided that the dollar was the currency after the disappearance of the gold standard? Now, again, you might say, hey, well, the dollar is better. Your currency's trash. I hear a lot of ad hominem attacks when you start quoting some guy from Brazil or Kenya or Saudi Arabia. Who cares what South Africa's doing? Well, again, it all happens at the margins. South Africa is, some percentage, I don't know, maybe it's 0.5% or 1% of the world's economy. And if a lot of that trade moves to some other currency, it starts to have a marginal effect. We're going to go through the numbers in a minute. But what's interesting now is I always talk about two things. Momentum, I'm a big believer. Wealth thrives on momentum. Things happen in the margins, and culture matters. And the culture now in more of these countries is it's now becoming, I'm not saying it was I'm saying no one ever said it, but it's more commonplace, it's more accepted, it's more thought about, it's more discussed. Yeah, why do we have to use the dollar? In many places, that would have been sacrilege not that long ago. The U.S. was the only place to trade with. Now, 3/4 of the world does more trade with China than with the U.S. You don't have to like that. I'm not saying I like it. Whether I like it or not, nobody cares. Do I want to make sure that I'm going to succeed? I'm not saying move to China. Oh, the social credit score. I'm not saying move to China. I'm not saying get the Chinese currency. I'm not saying do anything China. I'm saying where you are in the U.S., it's going to have less impact, or where you are in the U.K., or wherever you are in the Western world, it's going to have less impact going forward as places like China come in. And as a result, you're going to have more people like the president of Brazil saying, why do we need the dollar? And so, yes, read a good report. It is highly unlikely that the U.S. dollar-denominated global reserve system will break and another currency will take the place of the U.S. dollar. That is likely correct. There's no one competitor. I don't think China would want it, but many will. So I've told you before, here's the numbers. From Y2K until now, U.S. dollar, world reserve currency, 71% down to 58%. That's the same metric by which the euro kind of spiked up in the 2010s and then, back down. Here's the metric for you. 5.5x increase since Y2K in non-traditional currencies as part of that world reserve currency basket, and almost 4 times since 2010. So in the last 14 years, 4x increase in the numbers. So that's marginal. We're talking single-digit percentages. I think it's getting close to double-digit percentages now. But that's non-traditional currency. It's not even worth, that's like other. And so you're seeing, a little bit of movement of the yen, a little bit of movement of the pound, right? Percent here, a percent there. What have I told you before? In the United States, where I lived when the global financial crisis, the global recession came in, I believe home ownership went from 69 to 63%. Look what happened. You ask the average man or woman on the street, what percentage of the country was unemployed during the Great Depression? And they'd say like 70%, 80%, 90%. It was like 25% at the worst. But it was marginal. And obviously 25 from like 5, I mean, that's a big difference. That's not really marginal. But, the numbers are always closer to the ones they currently are when there's catastrophe. And so from 71 to 58, what if you had another 25 years of that? What if you just kept at that same pace? Now you're down below 50%, well below 50%. You're down in the low 40s at that point by the middle of the century. What would that mean? Well, we're going to talk about that in a minute. Let's talk about why. Trading in alternative currencies has recently become easier and cheaper. That's driving people saying, let's use other currencies. Liquidity of non-traditional currencies has increased over the past decades, making it easier for countries to circumvent the dollar. I would also add, I think there's more just general will, more willingness. Somebody said it. It's like the 4-minute mile. Somebody said it. It was credible. Someone does something and others follow suit. Additionally, the notable rise of U.S. public debt over recent decades, fueled by the recurring spectacle. The report says of U.S. budget disputes regarding the debt ceiling has diminished investors' confidence in the stability of the U.S. government. People who've been around for a long time, Warren Buffett's one of them, where the U.S. is the best game in town. Technically, it's not true. Other countries have, better credit. Singapore wasn't really a thing in Warren Buffett's lifetime, maybe even at the beginning of my lifetime. Now it is. And Singapore is probably a more reliable place to put your money. You certainly don't have the political circus where it's like, oh, let's just not pay people. I get, the U.S. hasn't done that. Did have the credit rating downgraded. And so, that's moving in the wrong direction. And what's interesting, here's what I always think, right? And I think this is about any human relationship. Anyone who says, I'm a good person, it's silly. Let other people judge whether you're a good person. You know what? Many people think you're a good person. Some people think you're a bad person. This idea that anyone's a good person, to me, is always silly. But take that from the perspective of other countries. Let's say you live in the United States. And I mention that only because that's where I grew up. Go to Europe. Go to places in Asia and ask, are you more or less likely now versus 20 years ago to want to immigrate to the U.S.? Sure, there are people immigrating to the U.S. Let's look at, if you're a middle-class or wealthy person in the Europe or Asia, what do you think? What's your impression of confidence in U.S. markets? Now, there's plenty of Singaporeans who invest in the U.S. as a faster-growing, more robust market than Singapore, which I like because it's rather staid. They pay healthy tax-free dividends. It's just calm. That's good, in my opinion, for a certain part of a portfolio. But I don't see too many Singaporeans moving to the U.S. I don't see too many Western Europeans moving there. And they look at it, and in the same way you should ask people, hey, am I a good person? What do you think? Ask other countries. Is our debt worth something? Would you want to invest here? Are you more or less likely? Do you like our stock market more? Do you trust our government more? I think the U.S. is going in the wrong direction. So back to 2000, before that, the U.S. topped the world trade rankings. Back then, over 80% of countries traded more with the U.S. Than with China. But the U.S. exports a lot less now. China's a much bigger player. And so all this stuff is changing. Now, what would happen? Here's some things I've compiled from various reports. Due to fading demand for U.S. treasuries, financing costs are expected to increase, thereby making debt-taking more expensive for the U.S. It costs them more money to borrow money. They're already $37 trillion in debt. They already run deficits. Just paying off the debt, just paying the interest in the debt is already a problem. What if rates go up? It would also become more difficult to impose financial sanctions on third-party countries. This is one thing that the U.S. has done. We've talked about what else has happened since Y2K. 8% of people, basically, countries, entities. Now it's 29%. As I've told you, you not think there's an incentive? Those 29% of people also lack the same kind of self-awareness I'm talking about. And they're also not saying, do you think that we're bad people, like, working with Iran or working with this or working with that? Like, no, we think we're pretty good people. They're bad. They're bad people over there. They don't think they should be sanctioned. And you know what? Enough of them happen. It almost kind of backfires. And the U.S. admitted this in the Russia-Ukraine war. We can't do secondary sanctions on countries like India. It just backfire. They're going to have less and less and less power. So you're going to see the rise of other countries coming up. I'm not saying that the Iranian rial is going to take over the world reserve currency scene. But, in a world where U.S. sanctions meant less, you'd see some other countries come up. And it's just, 29% of the world being sanctioned. Really? There's 4 times more bad guys since 24 years ago? Really? I actually think it's kind of going the other direction. Relative peace and prosperity. Obviously, there's always issues, but, people, there's very little kind of extreme poverty. It's down to 1/5 or 1/6 of the levels my parents were born. Things are in many ways better, but somehow the U.S. is waging war on more people. They're not going to have the ability to do that anymore. Less pricing power, continued push towards economic problems. People complain about it. Ask for socialism for. Okay, that's from, I added that last part. What happens when people have bad pricing power in their country because of these aforementioned issues? What happens when their dollar's worth less because of other alternatives? They may not know the alternatives. They may not hear about it. They'll just feel it when they pay for stuff. They may not be paying attention. Even a lot of smart people don't, to what's happening in Indonesia or what's happening in Brazil or what's happening here or what's happening there. Those countries are growing. And they're not without their problems. Neither is where you're from. But when people go out and they say, hey, things cost more because some of the jobs are done in Indonesia now, and we do that here at Nomad Capitalist. I don't think I owe someone a job just because I grew up next to them. And they'll realize that when they have to pay for stuff, it's more expensive. What are they going to do? Well, we've seen what they're going to do. We've seen more movements towards much more left-wing tax the rich, outright take their stuff. It's going to get worse and worse. Nobody complained in the U.S. in the 80s because everyone was fat and happy. When they're not fat and happy, watch the claws come out. So I would want to make sure I had some assets not only outside of U.S. dollars. It could be stocks, it could be cash, it could be real estate, it could be whatever. I'd want to have some stuff that those people couldn't get their claws on, legally, of course. I'd want to make sure that I have a place to go when the claws come out. And lastly, geopolitical power. I don't know that, the U.S. obviously is a unique case, has this great geographical advantage. But you could argue it won't be as safe. Again, marginal decreases in safety, have to maintain more, pay more to spin its world order. What's very fascinating to me is, the U.S. will go and say, oh, you can't put a military base in, even in the west coast of Africa. That's our territory. West coast of Africa, right? But then they'll go and put their bases next to all the other countries. And I think that you're starting to see that that's wearing a little thin with some of these people. I'm not saying the U.S. is always wrong, but the other countries have their own opinions and they might think it's wrong. And so the U.S. may well have to spend more to maintain the kind of world order and the power that it has at a time when maybe it'll cost them more to do that. And so I'm not going to prognosticate to a total doom and gloom level of collapse, but it just seems like things could get more expensive, less safe, both geopolitically, just around your neighborhood. People are going to be upset. They're going to be calling for you to pay more. They're going to be calling for the government to take your stuff, bring in the wealth tax, because they're going to be scared. And that's how they're going to react. That's what I think de-dollarization is about. And the fact that it's not one currency taking over, what does it matter? If you're living in a place or you hold that one of those non-traditional currencies that are up 4x, maybe you benefit from that in some way. But if you live in a place where your currency's share of the world reserve currency is going down, I think long-term that's something to be protected about. And I think, what I look at as I get older is I'm looking for 10, 20, 30 years in the future. And I want to be protected for that. And so if I've got $10 million, maybe I set aside, a couple $100,000 and I get diversified. And I put some money in banks. I set up a trust to do some things to protect myself. If I got more, I do more. If I do less, I get less. I'm getting a passport because I want a place to go. Robert Kiyosaki told us at Nomad Capital's Live, where do you get in 3 days? When the claws come out, you're going to want to be somewhere else. So you can join us at Nomad Capitalist Live. Comes up every September. It's our 4-day annual event, nomadcapitalist.com/live. If you have $1 million or more, you want to figure out how to protect yourself, there's solutions. 1 million is different than 10 million, is different than 100 million. We've helped people in all those categories and higher. Go to nomadcapitalist.com/apply. I'm not going to be the guy telling you run for the hills. It's all falling down tomorrow. But it's the frog in the boiling pot. Over time, you'll want to be protected. Over time, you'll see more people coming for your wealth. You'll see more instability. And that's the worst kind of progression because you may not see it coming as much. And you may think everything's fine until it's not. And I think having places to go, places to live, places where you're accepted that are different than your country, that are more geopolitically neutral, that don't rely on a world reserve currency, all that stuff will be important to have, as well as just safe places to park your cash.